What's going on, folks? Good morning. It is March 2nd. We're going to take a look at the JP Morgan Chase and Company chart. Looks like this thing has been getting beat down pretty good here. Let's see if we can walk through a couple different scenarios for this stock and maybe see what lies ahead. So it does look like we are obviously in a downtrend. So we have this big topping pattern taking place. Things really started to look like trouble here when we got this lower high. So this thing traded back up, but didn't quite make a new high. Printed a lower high, and then you can see what happened is we had a massive gap down. It looks like that gap down took place on January 14th, and it also looks like JP Morgan had an earnings announcement on that day. So the lower high correlated with probably some bad earnings, created a gap down, and that was the end for this stock, at least for the time being. So this was definitely a large, broad, rounding, topping pattern correlated with that lower high. And then, of course, earnings came out and we gapped down and the party was over for this stock. So that was a lower high, and then we traded down quite aggressively to this lower low. Got a bounce, created another lower high, and we are currently in the next swing down. And so far we have looks like a lower low. So we are definitely in a downtrend here for JP Morgan. So looking at this, you should definitely be short this stock or flat. Personally, I would not be long this stock. I would not be trying to buy the bottom. And one of many reasons is, see this gap down here? Looks like this gap is between 105 and 110. Well, that gap could get filled, which means that the price could trade all the way down to that level at some point. Probably won't happen in one candle or 1 week, but we could definitely keep creating lower highs, lower lows, and trade down to fill that gap. So that is the dangerous part about trying to buy the bottom, is you don't quite know where it'll bottom out. And looking at this from an outsider, I do not own this stock. There is a gap down here. So that is an area that could get filled at some point, all depending on how far these markets want to head south. And some of these banking stocks are getting hammered pretty well. Doesn't mean you're not going to bottom as of yesterday. I mean, that looks like at least for the short term, a pretty good bottom candle. But that is not enough conviction for us to step on board here and get long this stock. So I think worst case scenario, you'll see this gap get filled down in here. Like I said, that is between the 105 and the, looks like 110, give or take. So that is on the downside, worst case scenario. And if you're flat or short, well, then that'll work out well, because if you're flat, you're not losing money. And if you're short, you're making money if it trades down to that 105, 110 area. And if you fill that gap and then you start to rally from there, you have the opportunity to still get long at lower prices than where it's at today, at 136. So that is what I see here for JP Morgan on the downside. Let me jump over to the other side of the trade, which would be the upside, the long side of the trade. So what we want to see here is we're going to rally up. This is a scenario that could play out. We'll see a rally here, and that'll either be it'll be a higher high, which means we'll get above this area right here, this 159, or it'll be a lower high. So let's play that scenario. Lower high, and then that next swing down is what we're really looking for as the big area of importance. We want to see a higher low. So we don't want to undercut this low down in here with that 133. We want to see that low get printed higher. So anywhere in here, really, it could be printed. It doesn't really matter. We'll call it right here, 142. If it starts doing something like that, that is when I personally would start looking at this thing from a bullish scenario, because that next leg up, assuming we print a higher low, that next leg up can be strong, fast, and that would get us that next higher high, and it would be off to the races. The new uptrend will be unfolding right before your eyes. So that is what I am looking for as one scenario. Another scenario is you get a V bottom and this thing just starts to go, and then you get these little red candle pullbacks, but it's basically a straight line to the upside. Kind of like this right here. This whole section right here, basically a straight line to the upside. You didn't really get a pullback till down the road. So you could get a V bottom, or you could get a strong move up to a pullback. That would be the higher low, and then that next swing up would be the higher high. So that's about two scenarios. Also, something bullish, we just don't know when, is you have a massive gap up here to the upside. So that gap's between like 160 and looks like 167. And in other videos, I have mentioned that gaps tend to go get filled. Excuse me. So at some point down the road, the price of JP Morgan will trade back up into that 160 to 167, 68 range. It'll fill that gap. And that could happen. That'll obviously happen after the market has bottomed and confirmed its new uptrend. So at that point, you should already be long this stock, and that gap fill will just be a benefit of owning the stock to the long side, because you should be long this stock before it actually gets back up to this 160 range. Of course, not financial advice, but that is what we would look at anyways. So that is what we see here for JP Morgan, and I want to show you a couple other things on the chart. But right now, you should either be flat this stock or short. And if you're short, you should probably have some kind of a protective stop in place if you do get that V bottom scenario playing out here. But it looks like it's been a pretty profitable short as of now. Of course, there's always higher risk being short stocks since they tend to rally over time. But if you have a good trailing stop in place and this thing continues lower and heads down to that lower gap here, well, you'll be sitting even in a better position with a short trade. So let's take a zoom out and let's go back in time a bit. So you could see over in here, this is that 2020 crazy market we dealt with. And obviously you could see, like, if we're sitting up in here for JP Morgan and you're trying to buy the bottom, well, look what unfolded in 2020, like how much lower we went, like 125. Like we went down massive, all the way down to $76. So that is where I always like to step in and say, well, all right, buying the bottom, I understand what you're trying to do. Thing is, you just don't know how low it can go. So just be careful with that approach, because it can get yourself in some trouble sometimes. So anyways, that is just something quick there. But what I wanted to look at here is, you can see we bottomed. A little bit hard to see. Let me, if I can get rid of the volume here. So you can see we put that bottom in, and then we traded up, created a nothing but another lower high. So still not quite bullish yet. We traded down, and then right in here, we created that higher low. And then what followed was a higher high. So definitely a new uptrend in place. Now what followed was some choppy sideways price action. Looks like we came back down here and we double bottomed. We met again with this low. So we found a nice floor for the price of the stock. And then we took off from there, really creating another higher high. So just wanted to show you that example of how higher lows and higher highs take place during market bottoms. I mean, you can see it was a choppy way out of this sell-off. We did trade back down, but then again, this was a higher low, so nothing to worry about. And we did trade a little sideways before we really started to rocket higher. So it definitely wasn't a straight line up, but you could see what started was a lower high to a higher low, and that next swing up strong, giving you that confirmation there's a new uptrend in place. Just wanted to share that with you. You could have been stopped out in this area, and that would be understandable because we came all the way back down to that low. But then again, on this next swing up would have been a great time to get back in the stock. And this pullback here, you probably would have not been stopped out and then just traded sideways and then making a big old run to the upside. Looks like the free trial here is giving me some trouble. See if I can redo this here. Oh. So that's kind of my thoughts on JP Morgan. Let's take a look over at Google Finance. Looks like this morning we are trading up, 86 cents. Yesterday we were down 3.7%. So that is our stance right now. We definitely wouldn't be trying to buy this dip. And of course that doesn't mean we can't bottom here. It's just we're playing the odds long term. And we need, JP Morgan has quite a bit of work to do to the upside before we would personally be bullish on the stock. Right now it looks ugly and there is a big topping pattern in place. All right, everybody, thank you for taking time out of your day to watch this video. Thanks for everybody who likes and subscribes to the channel. Welcome to all the new subs. Let me know down in the video comments your thoughts on JP Morgan and any other stocks you're interested in for a video. All links are in the video description. Thanks and take care.